Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss multi-day runners, this week in the market, and a little more.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Q knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies Going in Raw.
Featuring Dan, Dia Dips,
And Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, November the 28th, and you can never tell us we don't love you ever again. I just got off an airplane. I Ubered straight here. It is rivalry weekend right now. It is Saturday. The Auburn game, Auburn, Alabama, which I'm sure we'll get mollywopped in, comes on in 40 minutes. Michigan and Ohio State are in a good one. And boy, do I want to be watching it. But instead, I get to talk to you lovely people. But look, swings still kind of beat down. Volume in the market this week wasn't great. I mean, that's expected with a 3.5-day week. You still had a couple runners, but at the same time, it seemed like such a convenient time for a very new COVID strain to come out. First, we had the Wuhan, then we had the Delta, and now we got the South African one. Is it how out of just nowhere just happened to happen right on the lowest volume week, right when things are getting hot? Did it just want to ruin our days or what?
Well, that's the funny thing is that two things that I find really coincidental. One being that when all of this was happening, I mean, how many times did the WHO come out and say, this isn't a pandemic, relax, this isn't a pandemic, these strains have nothing to worry about. And then 5 minutes before the market closes on Friday, WHO comes out and says that the African strain is of great concern. Are you fucking serious? Like, it's almost like that saying inside when you're trading stocks, and it's like buy the rumor, sell the news. Yeah, that's it. It's kind of like that's like how the WHO feels like, in my opinion.
It's kind of crazy that the buy the rumor, sell the news thing is so irrelevant almost right now due to the state of the market that we almost forget what used to be just said every day. Buy the rumor, sell the news. But now it's like the market's so crazy that, if something even has a rumor, you want to buy the speculation of the rumor.
It's crazy. And the thing for me right now is that I'll be a buyer of SPY. SPY's quickly approaching that 355 level of support. If we flush through there, I'll probably start a position long. This, in my opinion, was a pure technical sell-off. And the market makers are hiding the sell-off behind the COVID news, in the COVID headlines, and not that the COVID headlines aren't for cause of worry.
Yeah, we don't want to downplay anything. If you have family in South Africa, travel bans are now in place, and that totally upped up things for the holidays for a lot of people. So obviously, if you're in those situations,
exactly.
Condolences.
But for us to sit here and say that, the market was down 800 points or something, about 1.5%. So for us to say that the African strain is economically, affecting the market 800 points is a little bit of a stretch. Fundamentally, although it's a shame and we don't want to see new strains, it's fundamentally not going to affect the economy that much. In fact, if anything, and this might be like a little like capitalist minded, but if anything, like a new COVID strain probably just gives the Fed a reason to continue to buy and not to taper. So if anything, that's probably bullish. In my opinion, this SPY sell-off or, this SPY, small downtrend is purely technical and is just being, hidden underneath the headlines. If we do flush that 355 support, I'll be a buyer. Or if we come down to that 355 support, I'm talking about SPY, and we start to consolidate there and curl back up, I'll also be a buyer. In my opinion, I think that by the first or second week of January, we'll be at all-time highs again.
Yeah, you've mentioned in a couple past episodes that, the market needs a pullback, and it doesn't really matter what it is. It needs one, even if it's just some, potentially whatever headline. Is this, and again, not trying to downplay it, is this that potential whatever headline?
100%. This is what we've been looking for what feels like, me personally, like 3 weeks. I think I tweeted it out like 2 weeks ago. I said this low volume melt up can continue longer than most people expect it to. That being said, when the sentiment changes, it can be like a hot knife cutting through butter. And this is what we're seeing. We're in low volume and the market was down 1.5%. So to me, all that says is that, this is purely technical. I've been looking for a pullback. Honestly, I wouldn't even mind 340, hell 330. I wouldn't even mind that.
That would cause a lot of panic. I think you may mean 430.
430. That's right. Sorry. Okay. 430. Yeah. I wouldn't even mind that. And that's me personally, this is personally, even if I was, if I had my 401k on the sideline right now, I'd probably be buying. Apple got smoked a little bit last week. Facebook, and what is it? It's Disney's underneath 150.
That's your generational buying opportunity.
That's my listen, I'll say it here, and in 20 years, I know in 20 years, listen, if Disney's at 150 in 20 years, I'll take it on the chin.
It's just in tapering around there for a while.
Yeah, for the last 20 years, like thanks you. Yeah, listen. Me personally, Disney is a generational hold. It is. It has more users than Netflix. And I think it's only worth about 20% more than that. And it's got the damn park, the whole damn park. Forget the whole innovation shit and the entertainment
and
shit.
And not to mention, whenever we can resurrect brains, we'll just get Walt Disney's from under there, and I'm sure the stock price will rocket.
It will rocket. You know what I mean? What we need? We need Elon Musk as CEO for Disney. That would be.
You don't think he's got his hands full?
No, he's fine. Yeah, he's fine. Listen, any man that has the time to tweet at 3 a.m. Due to inflation, 420 has gone up by 69 is a man with enough time to be CEO of Disney. Right? Disney. Yeah. But personally, back to what we were talking about. If my 401k was on the sideline or I had a little bit of money to play with, I would be a buyer here. I truly do not see any reason for this other than a technical sell-off. As I said, to just wrap it up, that 455 support, if it flushes under there, I'm talking a low volume flush under there, I'll be a buyer there of some calls near all-time high. For maybe February, give myself a little bit of time. And again, is that, when I'm taking these options, I'm giving myself a little bit more time in case there's more downside. I wouldn't mind buying the February options, taking a starter on the options and us going down to 430. I'm okay with that. I'd rather see the quote unquote max pain. We saw small caps got killed last week because of this low volume, SPY pullback. And so for me personally, I just think that means that we rally harder because again, is that if any of you guys use those volume bars and those volume analysis bars on your charts, we're in such a low volume area that it doesn't take much to go one way or the other. It's kind of been like we've just been going down since Powell was it said that he was going to be renominated. To me personally, fundamentally, from a fundamental standpoint, that is way more important than anything because Powell is the man, the man with all the keys. He's the man waiting, and he decides who gets into heaven and who doesn't, in my opinion. So,
and right now we're on stock purgatory.
So to me personally, I'm a buyer here. I wouldn't mind a bigger pullback than what we're at, but I'm getting close to buying February options near all-time high, and I'll put it out there. I think that we probably see all-time highs by the second week of January.
Well, it is day after Black Friday when we're recording this, and we're about to get into our main topic, and we don't like adding this at the end, so for our dear listeners that actually listen, we want to give this to you. I think we should give away $100 and $250 to three people that retweet and like, and obviously follow PGIR Pod, and we'll pick it out. How about before Wednesday's episode, but we'll announce it on Wednesday's episode as well. Make sure you
giving money away.
Yeah, I'll give away the 100, and you'll give away the $250 bills. We'll do Cash App. We try to do Amazon gift cards, but we're too lazy for that. Just make sure you retweet and you like, and we'll pick one of the retweets and likes, and we'll know because we're kind of lacking on the retweets on the pod episode. So
yeah, what are you guys not enjoying our content?
Yeah, man, share it, guys. Come on. But yeah, no. If you guys retweet and like it, we'll pick one out, and we'll figure it out, and we'll get three of y'all boys some little cash flow for.
I can't believe I'm giving money away.
Fuck you, dude. I'll give it away because I'm the lovely host.
Whoa! You don't get to be a man of the people.
Hey, mister, I'm not spending $5 on Starbucks, but I'll buy a brand new Ferrari.
Whoa. I'm not buying a Ferrari. Listen. There's two things, okay? I am looking for a car. As I said on my tweet, okay? I'm actually going to let you guys pick out what car I buy once I decide between the two. I can tell you, though, that the chances of it being a Ferrari are extremely, very extremely low. But maybe one day.
Hey, and comment and don't say what, but just to enter, make sure you comment and say so other people don't just fucking retweet and like it. Make sure to comment what kind of car Hugh should get in responses to the tweet. You toss out retweet and like, you let Hugh know. We'll get you entered. All right. Because I know, whenever I got my car, everyone let me know why I got the wrong one. But so going into our main topic, and it's kind of relevant because even though last week was pretty shitty for, a lot of swings, there were two big multi-day runners. And that's kind of what we want to talk about today, are multi-day runners, how to know when to hold, when they're going to keep going. Obviously, we talk about scaling out a lot, but this week we saw ISPC go from around $5 all the way to above $22, around $23. You saw LGVN go from under 10 to around $44. Insane runs of 400% and looks like around 400% again. Crazy moves, and they happened over the course of a week. They kind of staggered on that Tuesday and Wednesday for ISPC, but just rocketed on Friday. And for LGVN, I mean, it just kind of here up and then down, here up and then down. Perfect for day trades, but at the same time, perfect if you held it as well.
Yeah. So LGVN especially, I think it was mostly due to that T+2. So a lot of times, we don't really have to worry about this now. But when you usually do a transaction, it's the transaction day plus 2 days to settle. Okay. Most of us don't have to worry about this. Actually, real side note. I tweeted something the other night about my old notes. I can't believe the difference in the brokers from a few years ago. I truly remember having to account for the $14 commission. That's how stressed I was and how much the commission meant. So it's crazy. And also, like I said, with the T+2, that used to be a real thing. You had to account for the fact that you were going to hold this for a few days. But so with the multi-day runners, there's a few things that is really important. And the biggest thing that everything always comes back to, and I'm hoping that half of you are hearing me inside your voice say volume, even before I said volume. If that makes sense, because what's going to keep these running for multi-days, and I mean, let's go back to DWAC. What happens? Shorts get in there. There's a good story. Enough volume comes. It churns. boom, explosion to the upside. The shorts pack in, it consolidates, it's not failing, it's soaking, explosion, move up, shorts cover, and so that move continuously happens. But then what ends up happening enough times, throughout the day, especially if it has a good enough story like DWAC, a good enough story where
that story was just Trump.
Exactly. Well, yeah. When I say good enough
for
story,
a lot of people, that's a good enough story.
Yeah. When I say good enough story, I mean truly, it's just like something like GameStop. Like GameStop is a perfect example, or AMC. Everybody took their first girlfriend to AMC. Like that's a good enough story for like, some 35-year-old who knows absolutely nothing about the stock market would be like, yeah, AMC. Like they had some good ass movies. Like
had great popcorn.
AMC. Yeah, great overpriced popcorn. Like this is a no-brainer, babe. So when I say good story, I mean truly like it's a story where, where truly non-traders can get behind it. Like it doesn't really have to do with the float. Like the catalyst isn't like something that only like 10% of the population will truly understand. So, a good enough of a story with enough volume and enough shorts continuously trying to get in there. Whoa, hang on. That is really in my face.
He just got a little light in his face, so a little intermission. I hope everyone had a great Thanksgiving. Okay, he's back. But yeah, shorts piling in, man.
Yeah, so with enough shorts continuously being stubborn and piling in, on those big moves. And listen, you can short those things. Give great opportunity, especially like I'm going to continue to talk about DWAC. DWAC, especially like in the 60s, gave $2, $3 moves with no issue. But that being said, if you didn't cover and you weren't nimble with your trades on the short side, I mean, you could have truly gotten smoked more than once. So again, all it takes is a good enough of a story, enough people like believing and, putting their money behind it, apes, if you will, plus enough shorts that continue to just be stubborn and every single big move just pile in. And if that continues into the second day, and it doesn't necessarily, you don't need to see necessarily like big ass moves the second day. But if it's kind of just hanging around, what I mean by that is like 4 a.m., it doesn't gap down, it doesn't gap down like a good bit, and like the volume's still churning, like, let's call it like 200 million shares, 300 million shares. That if you're a short trader, that is a huge red flag. And if you're a long bias trader, that usually means that you can get some sparks into the second and third day. Because again, it comes down to what's the shiny
So
thing.
is the main worry holding it over that first night? Because that second day is where you really confirm if it's going to, obviously, I mean, that's 2020 hindsight. Obviously, if it runs the next day, it's going to be a multi-day runner. That's common sense. But at the same time, that first morning after is where you really see, hey, if this thing can really power through again.
The biggest thing for me would be that would actually be pre-market. That's why I totally would never hold that many shorts over because if it's going, I'm talking Eastern time, if into that 8 p.m. Eastern time bell, like there's still tens of hundreds of thousands of trades going through, volume on it. That's a huge red flag. You have to cover. You have to cover because if there's volume going into that 8 p.m. bell, then it's probably going to gap up. One of the reasons that that things gap down is because into that 8 p.m. bell, there's just no volume. So at 4 a.m. the next morning, there's no volume there. So it gaps down. There's no bids, no volume, and it gaps down. And even still, maybe 9:30, 10 a.m. you see a move back towards, maybe a slight move back towards green, but it might not ever get there. If anything, that move at 10 a.m. back up is probably just a move for shorts to reposition. But the scary thing from the short side is when it's like, that 7 to 8 p.m. time period, that last hour before close. And I mean, shit is just, the volume is just going nuts. And you're like, who the hell's trading this? Hundreds of thousands of shares. Who the hell's doing this? That's when, if you're a short trader, you have to cover. I mean, you have to cover, because if it gaps up at 4 a.m. and it runs another 40%, I mean, it's over. You know, if like I said, if at 4 a.m. it gets up and it's 40%, it's going to be an all day runner, because now everybody who might have sold it yesterday because, you know, they didn't want to hold it overnight, who still believes in the story, they're going to go back in on a dip. You know, it's similar to what I was just talking about from the short side. When something gaps down and then it kind of comes back and retests that high, that's a chance for shorts to reposition. Okay.
Yeah, is that whenever people, because I mean, a lot of people say trapping shorts, but a lot of time are they just getting their entry?
Yeah. The shorts are, listen, a smart short is probably not going to hold it overnight, is going to, if it gaps down, something, you know, the top 3 runners, unless you're a really good short intraday trader, you're probably not going to hold it overnight. And if you do hold it overnight, it's maybe small after a big win, you know, like that, like in my experience from the guys who I talk to who are really experienced shorts, intraday and even swings, you know, they usually don't hold it any overnight. Maybe they'll hold 10% of their position overnight if it's a home run hitter. So, but like I said, is that if it gaps down, any kind of move up near the bell, that 9:30 a.m., that 10 a.m. is usually just a reason to reposition down. You know, it's usually just like maybe the shorts that were overnight are covering, you know, a few longs who still believe or are buying the dip, you know. So it's like that last move up before the dead kill. From the long side, if something gaps up and then it dips, that's a what's the word I'm looking for? That's how longs reposition for the long side. So like I just said, if it gaps down and then comes back up, that's a chance for shorts to reposition down, especially if it's trading about a third of the volume from the previous day. From the long side, if there's tons of volume and it gaps up, let's say another 35, 40%, and then it dips into open, that's a chance for longs to reposition to the long side. That's just from my experience. That's the way that I like to think about it. You know, see if you guys notice that as well. And those are the ones where, don't try not to overcomplicate trading as much as possible. Okay. Gaps down, it starts to go on low volume, a chance to reposition to the short side. Gaps up on good volume, runs into that 8 p.m., gaps up, dips into open. That's a chance for longs to reposition on the long side, especially if it has a good story. Don't overcomplicate it. Keep it simple.
Yeah, and another thing you kind of pointed out with like where there's just, hey, some shorts trying to get a position and, hey, maybe some longs that still believe are buying. It's like the last few soldiers on a battlefield. You know, you don't want to be the hero and not an Onoda. Sorry if I'm pronouncing that wrong. Do you know who he is?
No, I don't think
so.
He's
a Japanese soldier that fought World War II for 30 years.
Oh, shit.
Yeah, he didn't know the war ended.
Is this what you were looking at
just
Wikipedia the other night?
No,
I see you tweet about?
Judaism and Rugrats? No, that was amazing. Yeah, when it was like Tommy's actions toward Dill Pickles and the Rugrats movie symbolized the sacrifice of Isaac. I was like, all right, I need to look into this. But no, this guy just forgot that never found out the war ended. You know, so he just kept fighting. It's like, hey, dude, we're not trading DWAC anymore. Okay?
Yeah.
Like we're done. You know, you're wasting your fucking time, man.
Yeah, no, you're right. And the biggest thing that everything comes down to, any trade, long, short, etc., comes down to volume. That's everything comes down to volume. If there is one thing that you need to, you don't have to understand anything else. You don't have to use anything else. But I'm telling you right now is that if there's one indicator that you can use and you could trade efficienly with, it would be volume.
Yeah, no, just being able to see like, hey, someone just bought 150,000 shares of this $10 stock. He spent $1.5 million. Either he just made a big fat finger or he may know a little bit more than that. You know, sometimes it's stuff like that. Just watching volume is essentially just being able to watch level 2 and all the time, just being able to check it out. You know, you'll be able to see those walls being eaten there as well.
And the cool thing about volume is that you can backtest all this. So I would almost bet a pretty good amount that if you backtested the top 3 daily runners, let's from the previous day, and you track their volume during pre-market, and if that same volume was on track, that it probably had to move the second day. Or inside the same token, if you back tested the top 3 volume gainers from the previous day, and you tested them during pre-market, and they were only on pace for a third of the relative volume, that they probably ended the day down. I would probably bet a pretty good chunk on that. And again, don't overcomplicate. Those are things that, like, as you get into trading and as you start to pick up more, more experience and more time in front of the screens, that's something that you'll pick up on. So to my homies that are like, wow, how the hell do you figure that out? It all comes with screen time. And those are little things that you'll pick up. There's tons of little nuggets. When you're building a trade, even if it's just a day trade, you're building a thesis, a big grand thesis. And those are that's going to be one of the key points that I usually build into a thesis.
How much more volume do you think you need on that second day to what do you look for in the volume in pre-market? You got to be looking for something specific. Obviously, oh shit, it's a lot of volume, or hey, there was this much yesterday, I need this much. Is there any specific numbers you kind of look for just to secure that I'm definitely getting back in? Because I mean, the way you mentioned is, hey, yeah, that first night is the scariest for longs and for shorts, because it can gap down or it can gap up, or it can just look like it's going to have that dip and pop again. You see that dip the next day as a long, but you still see a good bit of volume coming in. What exactly are you looking for confirmation to re-enter on that second day?
Yeah. So for me personally, I don't want it to really, I would want it to, again, my favorite kind of form, I'll say, is when it runs into that 8 p.m. with good volume and then it gaps up and then dips down. That's my personal favorite. So even if, I'm getting it maybe $1 higher than where I would have liked to, or, even 10 or 15% higher, let's say, I'm okay with that, because that strategy and that pattern usually, it works out well for me, at least for the morning of the next day. If it dips, and, most of the time I would say that it probably needs another catalyst, because if it dips, then that just probably means that volume died off. And, again, it comes down to supply and demand, too much supply, not enough demand, and it brought it down. So something like, what was it? LGVN. They got FDA approved, and then it came out that it wasn't FDA approved. And then after hours, it was official FDA approval. Something like that is a story where it's okay, it wasn't FDA approved. So shorts all got packed in. And then out of nowhere, FDA comes, and FDA approval does actually come. So now all the longs that sold because there wasn't FDA approval are now rebuying it. And all the shorts that are packed in there are going to cover, or, maybe they don't have their breaking news on. And so they're going to cover once that thing starts to go. So those are one of the stories where, and again, it's a small float, so it trade 100 times its float or something. Those are one of the stories where I can be okay, yeah, this thing probably has a lot left in it. But for a regular, something that gets news and then the next morning it dips, I mean, it would have to dip. It's one of those arbitrage situations where maybe it dips 40% off highs and it was fundamentally sound news. Those are one of the times where I could get behind dip buying. But if it's not fundamentally sound news and it just, and it just opens the day down 20%, then I'm probably not going to touch it. It would have to increase relative volume by, maybe 10 or 15x. And to do that, it probably needs another catalyst.
At what point do you, and if you get worried about an offering? I mean, because I know some of these companies are scummy, and a lot of these that run 5 days in a row, maybe small caps, a lot of small caps, kind of scummy. Where do you kind of get worried? I mean, some of them will ride it until it's as high as it can to drop it. And then others, they'll be they'll get greedy and then it'll dip, be they're just like us, they're trying to get that bag. So, I mean, where do you get worried? And is it just more of a personality of that company?
Yeah, it's definitely a personality of that company. I mean, it only takes about 5 seconds to look up a company and, and see, how many offerings they've done inside the past 5 years, what's the average size of the offering, like you can get a good sense of the company. The other thing, and this is just a rule of thumb, is that if you're a swinger or a day trader, is that if you're a swinger or a day trader and they only have a month or two worth of cash, or even like only a quarter or two, I mean, you gotta be, especially if there's a shelf offering, you're asking for it. I mean, you're truly asking to get dumped on. I mean, if someone puts out news I'll just put out like a prime example. Okay. And I know there's going to be like 2 or 3 listeners that are like, oh yeah, that happened to me. If a company releases news like, hey, we are thinking about, we are going to move into the NFT space, or we are going to move towards Bitcoin mining, or we are going to move into the EV company. And like you start to go on Twitter and you start to look around, and people are like tagging the ticker, saying stuff like, if they're saying stuff like along the lines of like, wasn't this company just like a drug company? Now they're going into the EV space. That's a big red flag. The next big red flag is that if they have absolutely no plans and they're releasing a press release on like a hot topic, like weed, like EVs, like Bitcoin, like NFTs, something like that, like a key word, something like that. And they have no plans and they're just saying, hey, we plan to in the future, mine Bitcoin, something like that. Boom, 2 big red flags. The next big one is that, like I said, if they only have enough cash for the next quarter or two, big red flag. Again, it's going to come down to the company, looking into the company and seeing, what their revenues are, what their cash burn is. Do they do a lot of offerings? But overall, if I were a day trader and they had a shelf offering and it was, if they had a shelf offering and what's the word I'm looking for? And they released kind of like fluffy news, I would probably just stay away, because the thing is that you'll see like a lot of traders talk about like it feels like there's a goalie there. What's really hard to decipher, and it's actually like pretty much impossible to decipher, is if someone's sitting there soaking or if they're just goalkeeping that bottom. So what I mean by that is there kind of like that false bottom, that false bottom was not a roof. What's the other one on the bottom? Floor.
A floor?
Yeah, that's what I meant. That's what I meant.
Michael Jordan, the ceiling is the floor. Ceiling's the roof, or whatever the fuck he said.
But so if it feels like, there's like kind of like that false floor, and what I mean by that is
also just so everyone knows, Hugh did not know the word for floor. The opposite of roof. Like
I was bottom, just like carpet. I wanted to say carpet.
The bottom of the building that you put your feet on and shit. Yeah, okay. So false.
I'm just
floors.
thinking about other shit. Like I'm thinking about shit. I'm thinking about good shit,
Yeah, he's shit for brains.
Yeah. And so anyway, it's really hard to tell if a stock is soaking or if it's if there's like someone protecting that floor, because what sometimes happens is that a market maker is literally waiting, and what I mean by waiting is that they're literally waiting by the phone, waiting for a company to drop the offering, because at the end of the day, that market maker or that fund or that brokerage, they're getting money for dropping the offering. They're getting a piece of the pie, so they want it to be held up as well. So they might be or not organically, but they might be unorganically holding the stock up and waiting for that phone call to then drop the offering. Sometimes like a board has to meet and approve the offering and stuff like that. So if you ever feel like, it's kind of low volume and it just doesn't feel right, like at the end of the day, if it doesn't feel right, maybe there's not a lot of volume, and every time that it comes down to that like $10 level, it gets back up, and every time it comes down, it gets back up, you can scalp that. But just know, and that's where some of those knives come, is that at some point during the day, they're going to rug pull that thing, and it's going to go down $2 to $3 a share. And it's literally like dumping on the stock, because that's what they're doing. It's an ATM. It's an at the market offering. So all they're going to do is just dump 200, 300,000 shares on the market, and so that's something to be aware of. Okay. So more of the story is that check how many offerings they've done inside the past 3 to 5 years. See their burn rate. Do they have enough cash for the next quarter or two? Is the news that they released fluff? Is it a company like? Should this company be talking about EVs or Bitcoins when maybe it's a pharma or maybe it's a retail? Probably not. So that's something to keep aware of, and that's just one of the ways that you can stay safe out there.
All right. Well, this one is a question for the listeners. Here's a list of topics that we thought about doing for today, but we decided on this one. And you guys can help us pick out what we're doing next week. It's DD versus speculation versus rumor. And hey, if you fucking put this in the responses, you may get, a little more love for one of those $50 things. Maybe you only get one of the $50 ones if you help us pick. DD versus speculation versus rumor. Keeping healthy relationships and habits while trading, not ignoring responsibilities, getting outside, getting enough sleep, etc. What to do after you blow up your account. And lastly, journaling, tracking trades, and tracking market data / patterns. We can run over any of those and just let us know in the responses. And lastly, as it is rivalry week, looks like Ohio State's not going to do too well. Drew, I'm sorry, buddy. However, don't call it a comeback. A lot of football left, 4 minutes. Who do you think is going to win the playoffs this year, Hugh? I think I might be on your side. I know you're a slight Georgia fan for whatever reason, as most New Jerseyans are.
Diehard dogs, baby.
Yeah, as an Auburn fan, I'll be honest, I don't want to see it, as they haven't won a championship since the 80s. And, at least we got one in 2010. Yeah, I've never seen a group of grown-ass men bark. However, that's Georgia for you. I think I may be with you. I thought Ohio State was the only one that'd be able to pull it off, but I don't think Cincinnati or Notre Dame's going to be able to. So, War Eagle anyways, and I'm about to go watch us get mollywopped by Bama. However, War Eagle, and we will see you guys on Wednesday. Take care.
Go Dogs!
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.